Good morning and welcome everyone to Moneycontrol live stream. You're watching Opening Bell and I'm Santosh Nair. Bulls appear to be trading cautiously in the run-up to the budget. This third quarter earnings season has been going well so far, though market has largely been indifferent even to the best of positive earnings surprises. That was clearly seen in the case of banking stocks, where leading banks came out with good numbers. However, we're not seeing much of a uptick in the stock prices. Globally too, the cues have been decent, but there does not seem to be a case for being overly bullish at this point in time. The US markets too have been struggling for direction for a while now, despite strong quarterly numbers. And let's take a look at the trade setup for this morning. The SGX Nifty futures are indicating a subdued start for the Indian equities. Yesterday, market began on a firm note, but closed flattish, and it looks like that trend could continue today as well. US markets ended mixed last evening. Microsoft has said that new business growth slowed down in December. Its guidance for the current quarter also has been slightly cautious. FIIs continue to be net sellers. They were sellers again on Tuesday. This is now almost for the fourth consecutive session that they have been net sellers of Indian equity. JP Morgan equity strategist Marko Kolanovic has said that he expects a 10% correction in global equities later this year. His main point is that fundamentals have been deteriorating, but the market does not yet seem to be pricing in a recession and continues to climb higher. In F&O market, a quick look at some of the key trends. HCL Tech, Bajaj Auto and Maruti have been seeing build-up of long positions. Good set of numbers from Maruti there yesterday. ONGC, Concor and Sun TV have been seeing build-up of short positions. And with that, let's move over to the newsmakers this morning. United Breweries reported its third quarter numbers yesterday. Net profit was down by about 64% at 110 crore rupees compared to the same period last year. The revenue was down by 3.5% to 2,782 crore. Operating profits down by about close to 26%, and margins have fallen sharply. They have fallen from 17% during the quarter of FY22. They've fallen to 13.2% compared to 17% during the same quarter the previous year. Macrotech developers reported a net profit of 404 crore rupees, which is up by about 42% compared to the same period last year. Revenues, however, were down by close to 14% to 1,774 crores. Operating profits was down by close to about 16%, and margin slightly down at 22.8%. Now, realty stocks have had a good run last year, but over the last few months again the movement has been largely sideways because of concerns that rising interest rates at some point may affect demand for real estate. Bharti Airtel has said that it has raised tariff plans in 7 circles. It has now discontinued with the 99 to 111 rupee plans, and now the entry level plan starts at 155 rupees. Quick Heal has reported a net loss of 9.3 crore rupees versus the profit of 14.3 crore during the same quarter last year. Revenues were down by about 16% to 66.8 crore compared to 79.6 crore during the same period last year. The company has posted a loss at the operating level. The loss came in at 11.4 crore versus a profit of 20.5 crores last year. The stock fell sharply yesterday, falling by nearly 7%. And over to the brokerage bets, Colgate has rated, Nomura has rated Colgate neutral with a target price of 2,425 rupees. According to Nomura, the growth during third quarter has been anemic, and execution of the new strategy still remains the key to watch out for. Overall, December quarter numbers were below estimates. There's been a decline in volumes, and now for the company's plan which it had outlined to analysts last month, for it to succeed, there will have to be higher investments and also strong execution for the company's 4-pillar growth strategy to succeed. The stock is trading at close to 34 times 2-year forward earnings, which according to Nomura is slightly on the expensive side. And with that, let's move on to the stocks to keep an eye out for this morning. TVS Motor reported its third quarter numbers yesterday. The numbers were slightly ahead of market expectation, especially the net profit number, which was driven largely by cost efficiencies and also the company hiking product prices. Analyst commentary, however, has been mixed, with Citi and CLSA retaining their sell ratings on the stock. And the big concern, according to Citi, is that the company is unlikely to be able to maintain its pricing pressure, and that could come under is likely to maintain its pricing power. That could come under pressure as the competition in the electric vehicle segment rises. Also, Jefferies is positive on TVS. It has said that the company is likely to be the key beneficiary of the recovery in two-wheeler demand. CLSA has said that demand outlook for two-wheelers near term could be uncertain, and Morgan Stanley feels that improvement in the margin, that trend should continue near term. Maruti is the second stock on our watch list this morning. Again, mixed commentary from analysts post the third quarter. Some analysts expect Maruti to gain market share in near term, largely because of the ramp up of its new models. However, the gains could be limited over the next couple of years, according to CLSA. A quick check on the market. It's a bearish start. Nifty Bank and Nifty Mid Cap are under pressure early on in the session, and among the prominent losers in the Nifty at this point in time, we have Adani Ports, Adani Enterprises and L&T, which are down by close to 1%. The Nifty index itself is down by about 45 points in early trade. The sensex is down by about 142 points. And coming back to TVS Motors, the SUV ramp up is a big positive. However, sluggishness in the mass market is a cause for concern, according to brokerage house Jefferies. And according to Morgan Stanley, improving product mix, operating leverage and lower discount will drive earnings growth for Maruti. Karur Vysya is the last stock on our watch list. Good set of third quarter numbers there. Among the highlights were the improvement in core operating performance and also the aggressive write-off of bad loans, which is led to a good improvement in the overall asset quality. The bank's return on assets came in at 1.3%, which is ahead of the guidance. In fact, the management had guided for a return on assets at 1.2% by the end of the March quarter, so a beat on the ROA part there. Also, according to ICICI Securities, the third quarter numbers reflect successful execution of the redefined business strategies. It has flagged the fact that net NPL, net non-performing loans, is at multi-quarter low of 0.9%, and this is again ahead of the guidance. The company had said that it would bring down its net non-performing loss to below 1% by the end of the March quarter. ICICI Bank has upgraded its target price for the stock from 108 rupees to 120 rupees, as it says that upgraded digital platform, cost efficiency and normalization of credit costs will help Karur Vysya Bank sustain its ROA. And well, with that, it's a wrap on this episode of Opening Bell. Thank you for watching, and we'll be back with you again at 3:30 p.m.
February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.